Airline stocks outperforming in the S&P 500 over the past month. They're still down roughly 20% from their highs earlier this year. With the busy holiday travel season kicking off, is the group facing more headwinds or tailwinds at this point? Let's bring in Sheila Kahyaoglu. She's aerospace and defense analyst at Jefferies. And Sheila, it's been this situation where all the airline executives keep saying the level of activity is very high. They're not really seeing an observable fall off in demand in the coming months. Yet the market is expressing some, I guess, skepticism that the good times can continue. What's your general stance?
They're not seeing a fall off. I just tried to book an 8 p.m. flight out of JFK and prices are still sky high. And that's really what's helping the airlines. So capacity is pretty limited right now. We're seeing capacity 2% lower. That's because some of the airplane shortages that we're seeing. But TSA numbers are up 12% going into this holiday week versus 2019. So that's better than the trends we saw on Labor Day and July 4th, which was actually in line to below 2019 levels. So airlines are seeing very good top line trends, especially with leisure customers. Corporate right now is staggering around 80%, and we're going to see if that improves. So we won't see that till about February, March timeframe. So airlines are given a little leeway on what they're going to see on the corporate side.
So corporate, you're saying 80% of pre-pandemic levels? Exactly.
It's kind of staggering around that mark, 80% of pre-pandemic in the Q3 quarter. And it was the same trend that we saw in July. So, does Zoom come in and permanently replace 10% of travel? So do we only have 10% more to go? And we don't ever get to those pre-pandemic levels for corporate. So that's a trend we're watching, of course, because corporate customers tend to pay more. So if inflation cools off airfare pricing, what does that do to the top line? The top line story is critical, but what I think we're looking forward to most as Southwest and Delta and some other global airlines have analyst days in December is the cost side of the equation. So airlines projected costs to be low single digit above 2019 levels. And right now they're 20% above 2019 levels. And that's really what's driving airline stocks these days at a 70% market discount. So these airline stocks are, the buy side is pricing in costs going up.
Got it. And we were just showing there that Delta is the one of the majors that you recommended. Is that because they're better positioned in that sense, or is it is it a better balance sheet, or what goes into that call?
Delta is our only buy rated stock within the network carriers, and that's because of its ancillary businesses, and that's what we think Delta is going to highlight during its analyst day. So Delta has a maintenance repair business that's about $5 billion of revenue that we value at $10 billion. They also have a loyalty program business that we value in another $10 billion. When you compare that to the enterprise value of Delta, which is around $35 billion, that's where we really see the value of Delta. Not that it's a sum of the parts story and they'd ever split these businesses off, but we like the option value created in terms of buying Delta. Not only are you buying an airline, but you're buying a commercial aerospace maintenance facility as well as a card business. So I think we like the diversification within Delta. We also like its exposure to where they're exposed with corporate customers, which is small to mid-sized businesses, where you're seeing the recovery improve at a much faster clip.
And what are the main things that would, I guess, hold you back from finding the other carriers more attractive? Is it just that margin story and the risk that we do see, demand suffer next year?
Yes, a lot of the airlines are going through pilot negotiations right now. And as I mentioned, costs are up. They forecasted for costs to be low single digits above 2019 levels, and we're up almost 20%. And we haven't even touched the salary equation of the cost equation yet. So we're seeing what the pilot negotiations do. And right now we're hearing it could be up 20% in terms of wages. So we're going to see what happens with that. And I think some of the things that would drive us more constructive on the other airlines is, valuation. As we see, valuation at 70% discounts, it looks appealing. Those are wide discounts, even compared to their relative history. Airlines tend to trade at about a 50% discount to the market. So they are already pricing in these higher costs.
All right, Sheila, appreciate it. Thanks for the time today. Have a good Thanksgiving.